Hello and welcome to this July edition of Amundi's Market Review. Strong growth, accommodative central banks and short-lived inflation confirm an ideal Goldilocks scenario in the near term. However, its stability and long-term sustainability are more questionable. Inflation and central bank speeches were the main events in June. Inflation is already moving faster than expected. The US Consumer Price Index increased 5% on an annual basis. We expect the CPI in the US to peak in the second quarter, and it is likely to persist above pre-crisis levels for the next 2 years. The US Federal Reserve Central Bank redefined its inflation goal to focus on the average of inflation rather than the rate of inflation at a point in time. The new strategy puts more weight on the bolstering the labor market and less on worries about inflation that is too high. The labor market then is the priority. The Fed will look at official data, not forecasts. Relevant job data will be published in August. By then, some of the base effects on inflation should already start to fade, and we will have a more specific assessment. The Federal Reserve disclosed the board's rate expectations, factoring in 2 rate hikes by 2023, earlier than expected. Markets had an orderly reaction. Soon after, the Fed chairman Jay Powell reframed the narrative of more dovish, accommodating tones to successfully anchor long-term inflation expectation. The 10-year Treasury closed the month lower to 1.47. The European Central Bank maintained its program of pandemic emergencies, or PPP, purchases at a sustained pace, even higher than the first quarter. The German bond interest rate moved in a range, closing at minus 20 basis points, in line with end-of-May levels. Europe began to enjoy seeing a strong market demand for its next-generation EU bond issuances, with yields higher than the bund. The US dollar appreciated to 119 versus the euro, 138 versus the UK sterling, and was almost unchanged versus the Japanese yen. Commodity-based currencies recovered. The US twin deficits are big in size and often translate into currency depreciation in the medium run. However, in the short term, we see both growth and carry advantage proving strong enough to sustain the euro-US dollar target 118 by year-end. Improving fundamentals and supportive technical keep valuations tight and corporate bonds substantially stable. High yield tightened 30 basis points and 7 basis points in the US and euro area respectively. Investment grade was almost stable across the board. Emerging markets bond index, the EMBI, spread widened only marginally. Equity markets extended the year-to-date rally on Goldilocks scenario. US equities were up more than 2%, followed by European and Japanese equities up 1%, while the Hong Kong Hang Seng is down 2%. Commodities drifted higher. WTI is up 11%, Brent 8%, both resilient to strong demand expectations for oil. Gold is down 7%, affected by the Fed's next steps in the second half of this year. Base metals will continue to move higher on potential shortages and economic recovery. On the investment front, this outlook confirms the need to move cautiously. The cyclical reflation trade is not over, but is getting less straightforward. On the bond side, we keep a short duration stance while we are constructive on credit, especially in Europe, given the economic acceleration of the region. In emerging markets, we also keep a cautious duration approach. Inflation is not just a US matter. With emerging market central banks in a tightening phase, a stronger dollar can be an headwind for them. So, we keep a neutral stance on emerging market bonds while we look for opportunities in currencies and equities. Vaccination in September might trigger a rally in the equity markets. Before concluding, an update on the COVID situation. The Delta variant seems so far a manageable risk for Europe for the time being. The UK is potentially using the hospitalization rate as a parameter to allow reopenings. China, vice versa, is looking to potentially extend its quarantine. Thank you for listening. Please keep safe and see you next month for another market review.
TMB และธนาชาติเปลี่ยนเป็น TTB เปลี่ยนเพื่อให้ชีวิตคุณดีขึ้น